Welcome back to another weekly Forex forecast, everybody. Let's get right into this week's Forex forecast. So looking at the DXY, the US dollar first, we have that weekly demand and control and the monthly demand and control. We can go back, take a look. This is the little weekly zone, and the dotted lines you see here, that is a monthly area of demand. So that's why I've been pretty bullish every time prices come back into weekly demand. I will admit the downward trend line is looking pretty strong to the downside. However, monthly demand is stronger than a weekly downward trend line, and this is not really the best downward trend line I have seen. Things get a little bit more clear when we go down to some of the lower time frames. Let's go down to the daily chart first. You can see this purple box. This is resistance. This is not supply. I am a supply and demand trader. This is resistance. I don't trade support and resistance. I use resistance on my charts like this to determine where the liquidity is. And I believe the liquidity is here, and we have a daily supply above. So I still think we will be targeting this daily supply, targeting all the liquidity there and pushing up to 98.33, where then I think we will see a decent move to the downside, maybe a 1-to-1, 2-to-1 move before we end up breaking it. This is what I'm predicting to take place on the DXY. We have seen some weakness here as we have come back into that resistance area, but I think we will be pushing back up to the upside. As far as the 1 hour chart goes, I pointed out this 1 hour supply zone right here. We've got a beautiful move off of that 1 hour supply zone. As you can see on the screen, I predicted this move in the daily market breakdown video for the Diamond members, but I didn't think we'd get that big of a move, to be quite honest. I thought we would see somewhat of a move, maybe down to like here and then rally back up. And why? Well, I'll show you here in a second. But so far, nice move off of that supply. It is looking weak, but I think that this move is pretty much done. I think we will be pushing up from here. That is what I'm expecting. And look, I could be totally wrong. It doesn't mean I'm just only going to be looking for longs on the dollar. I'm going to be looking for shorts as well. And we just got to manage our risk appropriately depending on the trends. So the reason I thought this was going to be a short-lived move was, one, because in the daily chart, we had the liquidity and the daily supply above, which I think we will be targeting. Number two, the monthly and weekly demand is in control. And number three is on the 4 hour chart, we have liquidity resistance here as well as a beautiful 4 hour upward trend line. And this trend line has been respected a couple times now. So I am expecting this trend line to hold, push up to the supply on the daily chart, pretty much ignoring this 4 hour supply. But I think as long as this 4 hour trend line's holding, longs on the dollar are going to be much preferred. I will admit it's not looking too great. I mean, the trend line is holding, but I'd like to see a quicker move out. But at the end of the day, it is a nice trend line. It is being respected, and I am expecting to see the dollar continue to rally here this next week. And we will have some 1 hour supply to get through first. But if we do push up, if the 4 hour trend continues, we'll be pushing up to the daily supply, where we can then start to look for shorts on the DXY and the US dollar pairs. On to the forecast for the Euro US dollar. So you guys know I've had this daily demand zone on my chart for a while. You can go back, watch my previous forecast here on YouTube. I've had this zone on my chart for a while. Beautiful move off of our zone so far, and I'm kind of bullish the dollar, but we cannot deny the strength of the euro right now. And we even predicted this 4 hour demand zone here, right here. Beautiful move off that 4 hour zone that actually broke the trend line. And as you can see on the screen, this 4 hour zone was pointed out in last week's weekly Forex forecast, or 2 weeks ago, I forget. Probably both. So if that's not a reason to hit that like button and subscribe, I really don't know what is. So make sure you hit that subscribe button if you want to catch trades like this for free here on YouTube. So as far as the euro goes now, we broke the trend line, and we're kind of just basing out. What I'm looking for here on the euro to be bullish is to see if we can remove this trend, this high. If we can remove that high, we'll pretty much have a trend line here in the 4 hour chart, and that would actually be pretty bullish on the euro. And then I'll have to reassess my US dollar bullishness. So that's what I would be waiting for to really start to look for longs, because look, the trade has already kind of played out here on the euro. The daily supply, the daily demand is in control, sorry. But on the 1 hour chart, look at this 1 hour chart. We have clear resistance here, multiple touches pretty much off of that resistance area. And there's a supply zone above. It's not my favorite supply, but it's decent at 1.18. So if we pull up to this supply, there's going to be stop losses here, in my opinion. I think we could see maybe a 1-to-1, maybe a 2-to-1 move off of that supply zone. Remember, the daily demand's in control, so this is a lower odds situation, which means you still can short, but I would just be aggressive with trade management, meaning move my stop from right here where your stop should be to half risk or to break even as we push out of the zone. We're not going to be greedy here and target the low based off of the fact that the daily demand is in control and based on the fact that the US dollar has a 4-hour trend line to the upside. I wouldn't be getting greedy on the supply zone. So a quick short trade off of this supply. Another thing you could do, if you get short here, we get a nice push out, maybe take off 80% of your trade. Let 20% run in case we do really start to push down. Because look, I'm not 100%. No, nobody's 100%. Price really could take off from the zone. So having 20% of your position on could actually be worth it. So at this point, we're waiting for this supply to be hit, get a quick short trade. And if we break that supply, let's say we get that move to the downside there, we will have nice trends. And if there's a demand zone there, then we could look for longs. And at that point, I'll be pretty bullish on the euro US dollar if we do break that supply. And if we do, like I said, get a demand zone there. So really all going to revolve around this 1-hour supply right now on the euro US dollar. On to the forecast for gold. We are pushing up pretty nicely here on the daily chart. We are approaching the high above. So longs are still good in my opinion. However, as we get closer to the all-time high here, it does make me a little bit nervous getting in long. But at the end of the day, let's look at a few setups here on the 4-hour chart. We do have a nice 4-hour trend line. Let us throw a channel tool on this to really see where we are at within this overall trend. So you can see this is the 50% mark right here. We're pretty much floating right around it, if not above it just a little bit. So at this point, longs are preferred below the 50% mark. So if we get a push closer to the trend line, longs on a 15-minute time frame are going to be pretty good, in my opinion. So that's how I'd be viewing that. Throw the channel tool on, make sure we are at a good point, and make sure you guys draw that trend line as well. You guys know I had the supply zone last week. That was removed pretty much no problem. So full transparency here on my channel, guys. That was a losing call out that I pointed out, but it wasn't a setup that I personally took because it's counter trend to the higher time frames. And I just shorting gold, it's not my jam right now. So I personally avoided that one, but just full transparency, that was a setup that failed. But again, look at the trends on the left, top left, and the top and the bottom left, looking very, very strong. This last week here, we did push up. We broke this supply zone. This supply zone, I had to draw it after the fact, just based on the time I woke up, but it is the supply that removed the trend line. So this was not a trading setup. I just want to make that very clear. But look at how many times we've reacted off of that supply. 1, 2, 3, 4 times. There was clearly tons of supply in that area, and it was removed. What was it removed by? It was removed by this demand at 51.87. The initial move away is good. We removed supply. We removed a high. The overall move away is very good. I like this zone for a pullback long entry at 51.87. I think it's pretty good. If you don't feel confident taking this trade, you can just basically wait for the zone to be hit. And if you're a day trader, you could even look for 5-minute time frame longs in there as well. I think that's definitely an option. But at the end of the day, it's a good zone. Again, remove the high, multiple touches off of this proven supply zone. This was a significant supply in my opinion. So the demand that removes that is going to be pretty good. So that will be our pullback entry on gold. It's pretty much as simple and straightforward as that. Moving on to the forecast for the S&P 500, just wanted to give a full perspective here. Look at the momentum and trend on the weekly time frame. I did this a few weeks ago. It is good to do it again to kind of see what is taking place. If we throw a channel tool on this trend line, we are pretty overextended. I mean, the trends are really strong here, but we are literally sitting above the channel on the weekly chart. So seeing a deep pullback wouldn't shock me at all on the S&P 500, if I'm being honest, guys. Whether or not we get a pullback all the way down to our weekly zone at 60.50, I don't know about that, but I think we are kind of due for a deeper pullback. I personally don't short the S&P 500. But I did point out this 4-hour supply zone. I've had it on my charts for a while. Pointed out this supply zone to the Diamond members in the daily market breakdown video. And I mean, what a trade from the zone. I personally didn't take this trade because it's in my rules that I don't short the indexes. I thought it would be good for like a 1-to-1. But this is just a great example of how sometimes the lower odds situations can really turn into a bigger trade. If you want to trade alongside myself and the members, join the Diamond membership, where you will have access to the 38-page supply and demand zone PDF, which will be your complete trading guide, the daily market breakdown videos, which are forecasts that I release every single night for the members to trade alongside myself, step-by-step video lessons A to Z covering everything you need to know on supply and demand trading, the Sunday strategy Zoom session where members submit homework, and it's an interactive 1-hour call where we go over all of your homework and every trading related question, private access to myself inside of our private Discord group where I answer all of your trading related questions, and finally the Sunday live stream forecast where we break down over 30 markets together. And it's not just me. Here are some of the members and some of their trades they've been taking lately, absolutely killing it. And we also have some amazing reviews from some of the past members sharing their experience within the group. So if you're ready to trade alongside myself and the community, join the Diamond membership today. Links in the description down below. And just want to do a quick little lesson here. I don't like shorting the S&P 500. However, this was actually a little bit of a higher odds situation than I thought, because not only was the supply really good, I mean, look at the move away from the zone. Incredible, absolutely incredible move from that zone. But more importantly, that 4-hour supply was actually embedded inside of this daily supply. And this daily supply removed a trend line very, very clearly. And I actually think we could see a little bit more of a move down on the S&P 500 considering the higher time frames that I was just talking about on the weekly chart. So I think the reason that trade worked out for such a bigger move than I expected, and I didn't really realize it at the time, or I just didn't clue into me, but is because the daily supply was also in control. So it's like a level on top of level kind of situation where the 4-hour supply is inside of a higher time frame supply. So that's why I think that trade worked out so beautifully here on the 4-hour chart. Again, called out before it took place in the daily market breakdown video. We have a trend line that is currently in control on the 4-hour chart as well. The trend line is from here to here. This is a reaction off of our properly drawn trend line. So if you are bullish, which I don't blame you for being bullish, 15-minute time frame longs are good as long as this trend line is being respected. And we're at a decent point to do it as well, as we are reacting off of the trend line. And what I mean by that is however you like to trade it, whether it's supply and demand, support, resistance, whatever. I'm not one of those YouTubers here that say, oh, this is the only strategy you can trade. I think you can be profitable with almost any strategy. A lot of it is psychology. I do think some are better than others, obviously. That's why I trade supply and demand. But that's what I mean by that. However you trade, if you're trading a 15-minute time frame, watch this trend line. As long as that's holding, longs are going to be good. And if you're a swing trader like myself, what I'm waiting for personally is to see a push up, remove this supply, and any demand there would be a fantastic dip buying opportunity. And what I would also like to see as well is this all-time high removed. What the dream situation would be something like this. We push up, boom, break the supply, break the all-time high. That would be the dream situation. It's very possible we push up, respect the all-time high, we still have a zone, and I'll still take the trade as well if it's a good zone. So that's what I'd be waiting for. And again, that would be so significant because not only was it a good supply zone, but it's a proven supply, meaning we've seen evidence that there's supply there as we got another reaction off of it. So that is what I'd be waiting for as a swing trader. The other option is below this purple box. We do kind of have an older 4-hour zone down here at 66.48. It's pretty good. If we do, I'm just going to zoom out again. If we do get a pullback down to the zone, I think it could be good for a 1-to-1, 2-to-1 trade. It's such an old zone. I do prefer to be more aggressive with my trade management here because it's so old. So that's what I'd be doing if we do get a pullback all the way down to that 4-hour zone. But I do think it is more likely that we do push up from here and break the supply. And look, if we break this trend line right here, and we have a 4-hour supply there, you can add on to your trade if you're short from this zone of some of the members. You could even move your stop from here to here. But I always recommend people in these situations be aggressive with trade management because it's a counter trend. We just got a bigger move than expected, but sometimes that takes place. Moving on to the forecast for the USDJPY on the daily time frame here. It's really not the best looking chart. I mean, we do have a good supply zone above and liquidity, so I like that. The issue is we're just ping-ponging here. There's no trend. However, since we do have the liquidity above and the supply, I think that's where we're most likely headed at 158.09, and nobody can really deny the momentum we have seen here in the USDJPY. So I still think we have lots of room to the upside. Final take profit would be at that daily supply because I think it's possible we do see somewhat of a move off of it, and you don't really want to give up profit there. So I think we still have lots of room to push up here on the USDJPY. We have a couple of options if you are bullish. Number one, we have a 4-hour trend line. So if you're a day trader, draw this trend line. The trend line is drawn from here to there. So if you're a day trader trading the USDJPY, you want to monitor this trend line. As long as it's holding, 15-minute time frame longs are going to be good. As a swing trader, I'm looking at the 1-hour chart here. You can see 1-hour trend line is currently in control to the downside. So if you are bearish, which again, I'm not, but there is reason to look for shorts on a 5-minute chart because we have a very clear profit margin with liquidity at 155.24. So you could be looking to short a 5-minute chart to trade down to the 1-hour demand. It is a little bit aggressive, but I think it could be worth it if you are a day trader. So that's what I'd be doing if you're a day trader, looking to short a 5-minute chart. Profit margin is down to the demand at 155.24. But as a swing trader, I'm looking at this 1-hour zone for a potential long trade. This 1-hour zone removed an opposing supply zone from over here. Not only that, we have some sort of liquidity here. I don't really want to call that another reaction here. But what I would like to see is another reaction off the support, which would really tell me that there's stop losses here right at our demand zone. And that's where I'd be looking to buy at 155.24. Look at the zone as well. Nice basing, extremely good move away. Overall move away is very good as well. So that would be our pullback entry on the 1-hour chart to potentially target that liquidity on the daily time frame and push up to that daily supply. Moving on to the forecast for the GBPUSD. You guys know, if you've been following my forecast, we've had this trend line for quite a while now, and that trend line was removed. So now we're basically sitting in the middle of the curve. We have the daily supply and the daily demand. We are basically 50% of the way in. So it is a little bit tricky. We're going to have to rely on the 4-hour trends to really determine where price is going to be going. But I will say, if you're a swing trader, you could really be targeting the daily supply and the daily demand, whether you choose to get in long or short, because this is the curve. That is where I think we are most likely headed if we do start to trend down or if we do start to trend up. So as far as some of the lower time frames going, now the 4-hour is not a lower time frame, but it is for me. Look at this 4-hour chart here. We don't have an updated trend line. Usually I update the trend line. We don't have the trend line updated until we can break this low. This low has not been removed, and this trend line has been beautifully respected. Let me make this very, very clear. This trend line was from here to here. This is a reaction off of our trend line. We draw our trend lines, I don't want to say properly, but because it sounds kind of arrogant, but they're properly drawn trend lines. They're rule based. A lot of people, they're drawing their trend lines and they're just cutting through candles and they're not even making a new low or a new high. And I don't know how that's rule based. I think it's all made up. But our trend lines have great reactions off them. Not only are my supply and demand zones pretty accurate, as the members can probably comment down below and attest to that, or anybody who's been watching my forecast for a while, my trend lines are very accurate as well. So what I'll be watching is this trend line and this low on the 4-hour chart. If you are bearish on the British pound, as long as this 4-hour trend line's holding, 15-minute time frame shorts are going to be good. However, this is not looking great. This, from my experience, once we get a move like this and we kind of peak above the trend line, typically when we go back for a second test, the trend line will most likely be removed. So that is an option. If we do break the low here, we will have a trend line drawn from here to here. So make sure you guys remember that and draw it on your charts. I'll have it for the members. That's if we break the low. So it is still looking weak. We are sitting at the low, but it's still looking weak because the trend line is being respected. So you could still justify looking for shorts on the British pound. On the 1-hour chart, we haven't broke this 1-hour trend line, although look, it's looking pretty damn strong in my opinion. We still need a candle close above the trend line for it to be removed in my opinion. But look above here, we had a 1-hour trend line. That 1-hour trend line was removed by this supply at 1.353. It's not a bad zone. I don't love this situation here. But at the end of the day, if you are bearish, that would be our supply zone for a short trade if you're a swing trader on the British pound at 1.353. And if you're bullish the pound, if we remove that supply, any demand there is going to be a nice trading setup. So really all going to revolve around that 1-hour supply zone on the GBPUSD, as well as the 4-hour trend line to the downside. Onto the forecast for the USDCAD. Look at the weekly downward trend line here, looking pretty weak. However, weekly demand, we already got a move off of it we're getting it's being respected again. I don't like tested zones, but we cannot deny the strength we have seen as we have pushed down to the zone at 1.357. Not only that, I think there's room to go to the upside, target the weekly liquidity, and hit the weekly supply, where maybe we can then see a move to the downside. So that's a little bit of a higher time frame view. On the daily chart here, we have a nice, almost picture perfect daily downward trend line. Let's throw a channel tool on it and see where we are at. We're actually at a decent time to continue to look for shorts on the USDCAD as we're sitting above the 50% mark on the daily chart. So it is looking somewhat weak, I will admit that, on the USDCAD, but that didn't stop us from catching this beautiful long trade here. Picture perfect, almost no drawdown from that zone. Amazing. You could have easily targeted the high there. I personally didn't get all the move. I didn't really want to target the high in a counter trend trade. That's just me. But beautiful move off of that zone. So that was called out ahead of time in the daily market breakdown video for the Dime members as well. Full transparency, I also was pointing out this 1 hour zone here. We did get somewhat of a small move off of the zone, 1-to-1 take profit hit if that was your take profit. Break even stop loss would have also been hit as well, because again, it's counter trend. You want to be somewhat aggressive with trade management, and that's just the reality, guys. Sometimes we're going to get an instant move, and sometimes we're going to get a small move and then a break, and that's what we got here. So just wanted to be transparent. Not every trade's a winner, obviously. So just a great example of a great risk reward here. Let's say 3-to-1 take profit. You're up 3%, then you're down 2% after this minus 1% loss. So total of 2% with 50% win rate. Incredible. So when we broke this area of demand, and that demand, we have a 1 hour supply formed at 1.36. This zone is not bad. I love the move away. The basing is kind of concerning to me. It's very large. So if you want to short, I think 5-minute time frame confirmation in here is going to be much, much better on a 5-minute time frame. So if you're a day trader, I would just wait for this supply to be hit. Look for shorts on a 5-minute time frame. Look for supply zones to start to be formed, and then we could look for shorts on the USDCAD. That's really all I'm seeing. The 1 hour chart is not, the 4 hour chart's not very clear. It's really all going to revolve around that 1 hour supply. And like I said, the weekly demand's in control. We could be seeing some bullishness on the dollar here. So if we do remove that supply, any demand there is going to be decent for potential long trade there on the USDCAD. All right, on to the forecast for the Aussie US dollar. We are very, very overextended here. But just let me be clear, guys, just because we're overextended doesn't mean we can't see another move like this. I mean, that is like in one candle. I mean, I'm not saying that's going to happen. I'm just saying we could see another candle like that. Just because we're overextended doesn't mean we are due for a pullback. It's just kind of the whole concept of we are overextended is understanding that the probability is that we do see some sort of a pullback based off of the fact that we are overextended. On the daily chart, we are into an old daily supplies on. This supply is from literally 3 years ago, 2023. Feels like yesterday. Isn't that crazy? But the daily supplies in control, we've seen multiple moves off of the zone already. I'm not saying the supply is going to be used to push price down. It's possible. But even looking at the daily trend line here, we are pretty overextended. If we throw a channel tool on this trend line, you can see we're actually sitting above the 50% above the channel. So seeing a pullback wouldn't surprise me on the Aussie US dollar, which is why I was pointing out this 4 hour supply as well in the daily market breakdown video. Unfortunately, we pretty much saw an immediate pullback to the zone. I mean, we did get somewhat of a nice move off of that zone, but immediately pushed back up. Now the zone is tested. I did another daily breakdown video. I was telling the members, don't trade at this tested zone. It's not really the best at this point. But it was a good zone. The basing was decent. The move away was very good. Didn't surprise me to see somewhat of a move off this zone, but this trade's already kind of used up. So at this point, I'm not really seeing too many setups. What we have to wait for is this supply to be removed, and if there's a demand zone there, that will be our long setup on the Aussie. And until then, I'm just not really seeing too much. You could be viewing it on the 1 hour chart as well. And to be very clear, what I'd be doing on the 1 hour chart is I'd be mapping out this low and I'd be mapping out this high. If we can get the high removed, we will have a 1 hour trend line. Then you could look for longs on a 5-minute chart. So if you're a day trader, I'd be revolving around this high and the low in the 1 hour chart. If we push down, break this low, we will have an H1 downtrend, and then you could use the downward trend line as your guide for shorts on a 5-minute chart. So map out the high, map out the low that I just mapped out, map it out on your charts. If you got to pause the video, rewind, do what you got to do. That's what I'd be waiting for. And then, like I said, we are pretty overextended. So will we see another move off of that 4-hour supply to the downside? Who knows? Let me know what you guys think in the comments down below. I personally don't trade at tested zones, but it is possible we do see the move based off the fact that we are pretty overextended. But for me personally, as a swing trader, I mean, I'm just waiting for zones to be formed. This trade has already taken place. So at this point, as a swing trader, I'm just waiting for new zones to be formed by removing opposing zones. Moving on to the forecast for the USD Swiss. I'm not going to blow up the charts on the weekly or the daily, but look at this. Weekly momentum, weekly or daily momentum as well is all to the downside. Let me actually pull up the daily chart. We are pretty overextended. I mean, I will admit, it doesn't surprise me that we're basing out here. Wouldn't surprise me to push up to this daily supply as well at 0.78. I think it's a great area to look for shorts as well. If you are bullish, I mean, profit margin all the way up to that daily supply is completely reasonable, in my opinion, here on the USD Swiss. Obviously, we're kind of basing out right now on the daily chart, so it is a little bit confusing. And if you look here, look at this chart. We had a beautiful 1-hour demand zone set up here. Got the pullback, liquidity trap zone as well, stop losses all here. Beautiful trade from that zone. Called out ahead of time in the daily market breakdown videos, as you can see on the screen right now. And a couple of our members in the Discord group also caught that setup, so congrats to them. But then we kind of got just choppy here, and then we started to see zones fail, which is expected as, you know, so much trading in this area, it is expected to see zones fail. We also had this zone back here as well that was removed, and we now have a new 1-hour supply that was formed at 0.77. I don't mind the zone. It's kind of a tricky situation right now. This would be the basing in my opinion. I kind of wanted to draw the basing here, but to me it does make more sense to have the basing here. And it's possible we do see somewhat of a move off of that supply. I think we are a little overextended, so I think the move could be short-lived, maybe 1-to-1. I would probably be aggressive with trade management here, meaning stop to break even as soon as we get a nice 0.5-to-1 move from the zone. Just because, again, the basing is so large and the move aways, it's decent, but it's just making me a little bit nervous, especially how we are so overextended. So I think a quick move off that supply could be good. And if you're bullish, if we remove that supply, any demand there is going to be good for a long trade there on the USD Swiss. The 4-hour chart, not really showing us too much. Technically a 4-hour trend to the downside, but it's kind of just sideways in my opinion. It's not really the best trading right now on the Swiss. Unfortunately, this trade happened during the week, and I couldn't point it out for you guys here free on YouTube, but it was called out before in the daily market breakdown. On to the forecast for crude oil. Beautiful daily trend to the upside. It's looking really, really strong. However, I think that we could be seeing somewhat of a momentum shift here soon, not only because if you look at the weekly chart, we have a weekly trend line that's about to come in contact. I think we could be held up by that trend line, but also going back to the daily chart, we have a daily supply from back here at 69.91. I've had this zone on my chart for a while. I think that's where we could hesitate and maybe push and break the trend line. So I still think we have room to the upside on oil. I'm just saying, you know, we are kind of running out of steam here in my opinion. We have a couple of options on the 1-hour chart. We do have a 1-hour trend line. This is a very, very steep and aggressive trend line. I personally don't love it. Whenever we get such an aggressively steep trend line like this, usually we will see fake outs, but I still think we will be going up, but usually we will see fake outs. So keep that in mind. You could be looking for longs on a 5-minute chart as long as that trend line's holding, but it makes me a little bit nervous. I personally would avoid it if I was a day trader. The 4-hour trend line is just a little bit more clear. If you throw a channel tool on it, we are above the 50% mark. So I want to wait for below the 50% mark, and then 15-minute time frame longs are preferred. And what that does is it just prevents us from buying at the high. It just kind of shows us, you know, fair value, whatever you want to call it, and expensive in an overall trend. That's why I love this channel too. I just recently started using it, and honestly, it's been a game changer for my trading and for the analysis as well. So I'd be waiting for somewhat of a pullback into that deeper part of the channel, and then you can continue to look for longs in a 15-minute chart. And look, if we do get a pullback, I thought we were going to get it here. So unfortunate. I was excited to maybe get in long at the zone here on crude oil because it removed a supply zone. This was another trade we called out, but it was so close to our zone, and that's such a bummer. And if you guys need help with psychology, dealing with things like this, check out my Stoic Trading Psychology podcast, anywhere you get your podcasts. Also have a YouTube channel for it as well. Definitely will help you out with psychology things like this. So at this point, as long as the trend line's holding, 15-minute time frames or longs are good. Wait for a pullback down to this area, in my opinion. If we break the trend line, what we do is we hold off on longs from here to here. We don't trade here, at least for long trades. We wait in this area, set our order at the zone there, maybe see a move off that zone at 62, 64 on crude oil. Last but not least, we are on to Bitcoin. So weekly demand in control. It is currently breaking, but we still have 2 days for this candle to close. We could shoot up, and then I wouldn't really call it removed. More importantly, though, like I am concerned that the weekly zone is potentially breaking here, but I'm more focused on the fact that we have a monthly demand here. These dotted lines, that represents a monthly demand. So it wouldn't surprise me to see a move all the way up to 104 again, based off of the fact that we have macro demand in control. And look, I could be wrong, but we have to kind of go with what we have. As far as trading it goes now, on the 4-hour chart, we did remove a 4-hour downward trend. That 4-hour downward trend was removed by this 4-hour zone at 65,667. So this is our long trade right here. I mean, it's kind of already playing out. It's good. I like it. The move away is absolutely fantastic. The basing is perfect. Wouldn't surprise me to see a move to the upside here. And look, this is almost a 10 out of 10 zone in my opinion. Sometimes these zones will fail. Just because it's a 10 out of 10 zone doesn't mean it's going to work. So if we get stopped out here, it is what it is. We have to keep moving on. Sometimes the best zones will fail. Sometimes the worst zones will work. I've seen it happen so many times. But it's a great zone. And I mean, we have higher time frame forces in control as well. So it's a pretty high odds situation in my opinion. You could be looking for longs in here on a 15-minute time frame, looking for confirmation. If you guys don't know what confirmation is, I have like 3 great hour-and-a-half long video courses on my YouTube channel for free. You guys should definitely check out. That is our 4-hour demand zone for a pullback. If you want to be a little bit less aggressive, what we have here is a 1-hour downward trend line. So if we remove that downward trend line, any 1-hour demand there, that would kind of be our 1-hour confirmation as we come off that 4-hour zone. Typically, we're going to look for confirmation on a 15-minute chart, but the 1-hour trend line is so key right now that if that gets removed, that to me, that's really going to tell us that that 4-hour zone is going to be respected and we will be pushing up. So any demand there that removes that is going to be pretty significant. If you are bearish on Bitcoin, you think, Kev, no way that 4-hour zone is going to hold. You're dumb. We got to be looking for shorts. Respect. I understand. We want to draw, if you're gonna short, we want to draw this trend line from here to here, and then you want to throw the channel tool on it. We're at the lower end of the channel, so it's really not a great time to be looking for longs right now. Sorry, for shorts. So if we do get a push above the 50% mark, at that point here, okay, you could justify looking for 5-minute time frame shorts. I don't recommend it because, again, we have the 4-hour demand in control. 4-hour demand is stronger than a 1-hour downward trend line. That's why I do prefer the long trade. But again, everybody has their own different opinion. That's why I like to give both sides long and short. So if you're bearish, the only way I'd be shorting is if this 1-hour downward trend line's holding and if we get a pullback closer to the trend line. If you guys want access to my full-length forecast, join the Diamond membership where you will have access to that as well as my daily market forecast, the full course supply and demand PDF, and much, much more. Make sure you guys subscribe so you can catch next week's forecast as well. And I always appreciate a like. Thank you guys, and I'll see you in the next video.